Hi, hi.
Yeah, hi.
Hello.
Okay,
Hey.
sorry for that. This sometimes bugs out. Okay, I added a few contributors. Well, based on the role model we have now in Discord, a few people we've seen contribute to discussions, like ideas, everything else. They got the special tag. So I added just by memory some of you guys to the call because it is a contributor call. It's not just us doing monologue bullshit. Whoever else wants to join and speak in, please feel free to. The agenda, Lucas, could you please share the agenda in the general now?
Yeah, sure. You want me to send it to general, yeah?
Yeah, to general, so others can see. I can also make a screenshot of it.
I'll send it on the general channel.
Thank you. Thank you, guys. So everybody can see the agenda. Okay, to kick it off. First of all, happy holidays to everyone. We hope you're having a good time. We weren't able to have as much fun, especially Mikhail, because he's really keeping track of how the protocol is feeling in the first few days, the liquidations and other stuff. But yeah, hopefully you had some time to spend with your families or game or whatever else you do. So this is our first contributor call. We need to go through a few things like especially discuss things with the tokenomics. So things related to transferability of the token, why should it be transferable in the first place, liquidity mining models and things like that. The other part is, of course, the DAO operation. So there are many contributors now, basically you guys who want to participate and do something. So we need to, as a DAO, align what and how we're doing. And then talk through any other topics. Basically, those two things are already pretty big. Yeah, so if you please feel free to join in the call if you have something to say on those topics. You don't have to do it now. Just raise a hand in the waiting room. Yeah. So is anybody recording? Okay. Husky is recording. Thank you. Cool. Anybody wants to say a few words of hi, good launch or something, or bad launch or something like this before we kick off? Three, two, one. Okay, moving on. Let's start with the things related to the tokenomics, if you guys don't mind. Or should we do DAO operations first? Ilgis, what do you prefer? They can go by your list.
I think it's better to start with DAO operations. I think it's more important now.
Okay, cool. So guys, the first thing on the thing, onboarding new contributors. So there are many different things you can do in a DAO, as you know. It can be related to dev, so like actually coding. It can be related to community management, and it doesn't mean modding. It really means getting the product out there. Could be related to, let's say, external outreach. For example, some things we want to reach out to, let's say, Finematics or whatever else other YouTuber there is that actually does videos on the products. Also a part of it. Maintaining a newsletter, for instance, so doing a weekly recap of what is happening in the DAO, so we all together and everyone else can stay up to date on it, and all other stuff. So without further ado, let's actually hear out who is specializing in what and who would like to do what. So basically, feel free to turn your mic on, say, I've been working in this and this, I would prefer to do this. And then we can just keep the idea with it is that we can make a small or medium-sized list of people who would want to participate, and then we see who does what, who prefers to do what. That's the idea. So whoever wants to start, please go one by one with no order.
Hey, how are you guys? This is my first experience in a DAO. I have been contributing a little on the Gearbox, and I'm still learning. I have a little experience in community management for other protocols, so I can give a hand there and also contribute a little on the geo-economic side. But I feel I'm still learning, so I don't know if I'm gonna be able to contribute deeply, but at least with community management, I'm there for you, and yeah, I think I can start contributing there. Thanks for the opportunity.
Thank you. Sounds good. Yeah, I've seen many of your comments already in the Gear Econ and discussions list. So thanks for that. It was very thoughtful. Okay, sounds good. Add it on the list. Next one, please, sirs.
I can go next. First gear number list, like, yeah, what you're doing right now is perfect. That's exactly how you do get involved. Just start contributing to discussions and stuff. Yeah, I'm overqualified. I will probably do the most stuff with one, helping with governance and potentially writing proposals and contributing to discussions and stuff like that. I also will probably help with external outreach, both talking to people and helping create educational tools, as well as trying to form some partnerships here and there where it makes sense. So both like biz dev as well as educational outreach. And then I would be willing to help out with the newsletter. I do that with Alchemix. I don't want to be in charge of it though, so I would probably just mostly help that from like an editing perspective and stuff like that. And yeah.
Awesome. Thank you. I mean, you've been active for a very long time already in Gearbox DAO, so glad to see that we can finally get stand like on the same level and really contribute together. I mean, we have been so far, but really like in a non-official yet official capacity, really. Sounds good.
Yeah, pro bono.
Note it down. Oh, okay. This is another thing that you can do at the end, like what are the ideas of like the rewards and other stuff for contributors, because of course this is not pro bono things, right? So if I just asked them because it was very new, but yeah, okay, let's get to this topic once we go through everyone who wants to chime in. Like okay. Just wanted to like make others not be afraid of like, oh, damn, I have to work for free. No, that doesn't really.
I love your comment of if you're sick and tired of your 9-to-5 job, come do 24/7 DAO work. So much better.
Yeah. So much for freedom. Okay, let's go with someone else who wants to speak next.
Hey guys, congratulations, and very, very excited we are here. Yes, definitely I'm already doing some part of a community model, like, on the Discord, answering questions and all that. I enjoy a lot, and I will continue to do that. But to be more specific, I also enjoy doing the Gearbox that discussions, and see like maybe we can, like, I can even be participating, like, writing the proposals, or like, moderating the discussion, gathering all the points together and putting a proposal for that. I'm also interested in partnerships. So I know, like, if somebody comes up with an idea for a partnership, or like I have my own few ideas, to follow up on them and have a thread going with the other protocols, and like, so that whole process of like, coordination and getting together the idea, and then ultimately putting together like a proposal for the DAO, So there's a lot of work we need to do before we, from like just an idea to like actually possible. So I'm very interested on that. Like, I already have a few protocols in mind where I'm also contributor. So it will be a great synergy. So that's another area I'm very keen on working on. Yeah, very exciting times. Thank you.
Lovely. Thank you. Okay, noted down. Perfect.
All right, maybe I can go next.
Yep, please.
First off, congratulations, you guys. This has been amazing. It's been one of the better launches I've seen with DAOs. My name is Ali, and I am a founder. I started a project back in 2017, focused on algo trading, indexes, things like that. As it stands, well, we do have a DAO, so I have a fair bit of experience when it comes to building a team, developing product solutions, working with the difficulties of decentralized governance. And as it stands, we have a team of about 22 members, in large part some developers, marketing guys. So we do our own thing with the project, but I am extremely interested in what's been happening with Gearbox since very early on. I happen to be, well, I was fortunate enough to be a lob as well, or a lobster as well. So in terms of what we can do and the team can do, Ikram is one of the team members on our side. So with the algo trading experience we have, we can build certain trading strategies that will be essential. We're running liquidation bots that we will add more assets into so that we can liquidate anybody who goes under the health factor. And with the kind of experience that I myself and the team has, there's really a lot of things we can do. But I think what I would like to do and would like to put our teams and our resources to use would be in areas that some of our members may not be able to contribute. For instance, I could participate in proposals, governance, and all these things. I think they may be better left to other members. We could focus on some leverage trading strategies. We plan on integrating Gearbox into our exchange to offer leverage trading to the exchange. So, and then we work on multiple chains, EVM compatible, non-EVM compatible. So yeah, I think I'd be happy to be able to contribute in a technical capacity. Yeah, that's me.
Awesome. Thank you, Ali. Sounds good. Yeah. The couple of things that you mentioned on the liquidation side, that's very important because, as you said, sometimes it happens that due to gas fees or, I don't know, slippages going really off the weighted thresholds can create that debt. So one of the ways to manage it is the liquidity backstop that Aave has, right? Or another way to even prevent that is to really have a couple of friendly DAO liquidators who liquidate at a loss, but then the DAO is compensating for it in some certain cases, right? It has to be not abused, but yeah, that is especially one thing that definitely can work on together. And what you said about the strategies is because Gearbox should be and will be growing in terms of its compatibility, it would be very interesting to see what kind of complex strategies can be created, and probably the creators, at least to some extent, could be rewarded by the DAO for coming up with those new and cool strategies. So both of those things sound pretty cool. Nice. I wrote it down on the list.
Awesome. Love the sound of that. Yep.
Can I butt in real quick on one thing? I just have a quick thing. I'm sure there are some people who are going to miss this call that want to contribute, as well as people who maybe can't do voice. Maybe after this call, we could set up some sort of like shill yourself or state your resume or something thing just for people to post one paragraph about who they are and how they want to contribute. And that could be a nice resource for us to look at if we're like, hey, we need someone to do this. You look in there and be like, oh, this person says they can do that. Let me like reach out to them.
Nice. Yep. Noted down.
Hello, guys.
Hi, sir.
Oh, it's Minim the Memer. Yes.
Yes. So I'm a teacher in France. Sorry for my English if it's not perfect. I already contribute by making some videos for different protocols. I am focused by the Curve and Convex Finance ecosystem, but I want to participate in Gearbox protocol by doing some video montage or funny videos, new memes, and I want to become the meme lord of Gearbox. That's all.
That sounds awesome, yeah. And I've seen a few things that you made already, so thanks for that. That was really, I think the funniest one was where it was drawing the Gear Fathers one, where it's about like actually making something and then they're waiting there on the couch. That one was lovely. And I think the other one you did where, yeah, so anyway, seen a few, looks really cool. Yeah, okay, wrote down, thank you. Sirs, who would like to go next?
Guys, can you hear me?
Yeah. Yep.
Okay. First of all, Minem, your accent is fucking sexy. And I'm not really a big brain, so I am not really that if it's anything in gear economy or something like that. But I love to answering questions from new people. Somebody has to do it. So big brains got the time for other things. My idea or suggestion is to make something like on Twitter, documented Gearbox or whatever. We will figure it out. And it would be a group of few active people like Smina and shitpost and just reposting some tweets or some alpha for Discord or some new idea, memes or whatever. So I will post it in suggestions and ideas right now, and if some people want to do it, share a tweet deck or something like this, we can do it. We can arrange some Telegram group or whatever and get the shit done. Yep, thanks.
Okay, sounds good. Thank you, sir. I wrote down as well. Let's go next.
Hey, could I go next?
Yes, please.
Sure.
Yeah, hi guys. So yeah, I've just been following the Gearbox protocol for a while. I really love the way you guys did the drop of having people create the accounts and stuff. And yeah, so I've been a Python dev for 3-4 years, and I've been getting into Solidity for the past 2-3 months properly. So I've been going through the contracts, and I feel quite comfortable in it now. So I've done some small contributions to some protocols here and there. I helped out a little bit in the redacted cartel, but it was kind of my first thing contributing. So it was my first taste of it. And yeah, so I really just want to join as a Solidity dev contributor and hope to build out the protocol with you guys. And yeah, I hope, I see great things coming for this community. So I'm glad to be a part of it. Thank you.
Awesome, thank you. Mikhail, on the dev side of things, could you please slightly give context on what exactly, let's say, outside contributors could be, not outside contributors, what can be contributors working on? Let's say, without going into too much detail, right? What are the major topics that people could see working on the dev side?
Yeah, that would be great.
Okay, so sorry. Please tell.
No, it's up to you, right, to say. So, for example, there are adapters, right? Say what the complexity of adapters. There are core contracts if you want that. If you think we should be working on that now or not yet, and other things, because it's a very modular architecture. So, because you know it best, you probably can give a good guideline. Yeah. Anyway, I shut up now. Thank you.
So basically, I think we could attract a lot of developers. So feel free to join and connect. But basically, the core things which could be really interesting to implement, I believe the first one is a smart contract optimization, because I truly believe that there is a lot of things which could be done in a more efficient way, especially for gas consumption, and probably simplifying the flow. Even now, if you work, for example, with liquidation pod, you can find a few ways how it could be done in a more efficient way, and so on and so on. So basically, this is the first big topic, which is very, very significant for us. And if you are a Solidity developer who could just read the code and find a few things which is not written in an optimal way, or you have any ideas how to make them better, so you can connect me. We can set up a developer chat on Discord, or even you can add PR on GitHub just to provide your idea and what you're working on. The next point, of course, it's a really big topic also, and I think it's more about mod connected. We just start this idea. I think it's like the big range of product which is called analytics. And basically here, two major topics which we should to explore. The first one is how liquidation work, and a lot of jobs already done here. So they are building like our internal analytical tool, which could get a lot of insights how it works and so on and so on. Because it definitely, as a DAO, should control the process and understand how many players on this market are their business profitable. It could we set up better premiums and so on and so on. So it's a lot of things which could be analyzed to make clearance and transparency in this field. And the next point, I truly believe that current setup with price oracles is not good. So basically, it could be dramatically improved in case of using not only chaining oracles, maybe some could make some research, and it's also like a math connected stuff to understand how current price oracle could be upgraded. So basically, we should work on accuracy. Now, I think it could be dramatically improved if we, for example, switch for using not S or to USD converter. And another part for this price oracle to make them more reliable and work in more close way to understand how we could make them reliable in terms of problems with Chainlink oracle. Sometimes it happens and Chainlink could be really got stuck. And as you can see, the whole system depends on this data. So we should really definitely develop the ways how we could work in different emergency situations if problem with major price oracle happened. So it's basically another big part for research, and I think this is more math related. And maybe the last part for smart contracts is to make adapters, and it's also not just to write smart contracts, because as you can see on this existing setup and contracts are already open source, writing an adapter does not take a lot of things to develop. So you could simply copy Uniswap v3 and provide all the different ABY. But as previously, a lot of concerns about price oracle. For example, for Viorn, we have like a special wrapper for original Chainlink, and of course, a lot of security stuff should be discussed before implement such a thing. But I think it's a pretty interesting field to be integrated with many protocols, as Gearbox was designed. So basically, I think it's pretty nice to create a new group in Discord when we start discussion only about integrations and adapters and try to figure out things, what could go in wrong, what we could do if this oracle could be pulled by hacker or attacker, and so on and so on. So basically, very interesting tasks there, and I am totally inspired to work on such integration. That's all stuff about credit contracts. So basically, three major topics, and of course, we also have a lot of stuff for front-end development. So if you are Web3 front-end developer, please connect us ASAP, because a lot of stuff should be made. And as you can see, a lot of things could be improved in Wallet Connect, customer experience, maybe design, and so on and so on. So a lot of people we could really take on board to work on front end part. It's also very crucial, and analytics, which I've also mentioned. But if you are not developer, but you want to help a project from technical side, maybe you are not familiar with Solidity, but want to participate, and so on and so on. And first, feel free. We need good math brain who could make some research or calculation. But what is very crucial for project success is to build very clear and concise developers documentation. At the moment, unfortunately, dev.gearbox.fi is not well as it could be. So a lot of stuff should be checked. For example, method names. Now you can find some differences between published contracts and current version of documentation. Much things could be explained much better. We can include videos, tutorials, playgrounds, and so on, just to create amazing experience for people who want to develop. And even if you want to build something on Gearbox, your experience is very, very crucial. So please tell us what could be improved on dev side in this documentation to make it more clear and useful for developers, because our success, Gearbox success, depends on how easy and great to build on it. So basically, that's all stuff from developer side, what I really want to mention today.
Okay, perfect. Guys, especially developers, if you're on the call right now, if you have some questions which are concrete, mentioning what Mikhail just said, please state now. Otherwise, other things we can just go into later.
I think I'll maybe jump in. No particular questions for Mikhail, just to introduce myself. So my name is Ivan. I have about 5 years of experience working in industry professionally. Me and my partner who's in the audience, we have a consultancy firm doing various kinds of architecture and modeling. So for stuff like economic modeling, building architectures for like complex smart contract systems, this kind of stuff I can do. I can also do development, especially something that is mainly focused on contracts rather than front end. So I think right now it's very important to create as many adapters to other protocols as possible. So I can definitely help with that. And on the side of let's say liquidations or oracles, I also can help with like modeling, risk assessment, and this sort of stuff. So a lot of people have probably seen me discussing things in econ. So you can sort of get an impression of things I'm interested in and my way of thinking there.
Yeah, so I think it's a really great experience, and I think all this modeling and tools which we really need to build to understand what happens inside, especially for economic model and finding really correct parameters, which could find a good equilibrium between, for example, LP providers and traders and so on and so on, would be very, very nice. So I think it's a huge topic, and thanks for mentioning it. So Ivan, if you could create some chat to discuss such topics, or even work group, I don't know how to organize it pretty well. I think it's a really also very good things to make some clear plan and achieve and make transparent what we think and all consequences how to work with such system from the DAO side, because we also transited all rights to DAO, and DAO should learn and understand the whole system, and we could learn together which parameters means and understand how all of them could make systems stable or unstable, more profitable, less profitable, and so on and so on. So pretty nice that you're on board.
Nice. Let's keep going. I think we have at least a couple other people on the call who want to speak out. Okay, what people specifically be working on?
Yeah, sorry for cutting in, but yeah, I had a somewhat similar perspective on this. So I'm more towards the business side than towards the dev side. And basically, what I wanted to see at this point was some internal metrics that we have for the product. So the daily active users we're getting, the monthly active users we have, the kind of repetition we're getting from these users, the average fee that we're able to generate. Because at the end of the day, the DAO has to function properly. We need to have revenue separate from the treasury that we already have. The treasury is an asset, while constant revenue is what's actually going to enable us to go further. Second, the same data is actually going to enable us to take better decisions. So if we know we have some whales on board who are now giving us repeated business, who have the highest fee, do we want to discount them? Do we want to give them a lower fee on the overall product and maybe make slightly lesser revenue while making sure that we keep them on board? On the other side, actually onboarding people now. So while we're new and while we're developing the product, we are actually also in a pretty good time where a lot of Chinese users are going to be taken away from the central exchanges, who will be completely removing them on 31st, I think. So if we start something, say like a referral system, and just throwing an idea out there, a simple referral system, they might be able to hear about Gearbox right now, and onboarding them right now is probably the best time, because once you have your entire trading strategy and everything set up elsewhere, you usually tend to function over there once you have that familiarity with the product. So maybe it will be good if we can work on customer acquisition right now, as well as maintaining the basic hygiene metrics that enable us to see how the product is actually going forward. Not just in terms of TVL and everything, but in terms of actual users, user acquisition, and how they are working on the product.
Perfect. Sounds very nice. Note it down as well. Cool.
I guess can I have a quick mic check? Can you hear me?
Yeah, you still have the noise thing weird. Yeah. I mean, the loudness is fine. It just you have a lot of noise background, or it's just me, guys, or do you hear it too?
Okay, I will fix it. Thanks.
Yeah, I can still understand you, but there's definitely some background noise.
Yeah, it's okay, it's acceptable. Yeah, but yeah, if you could check, it would be great. Thank you. Okay, who wants to go next?
Hello, can you guys hear me? Hello.
Yep. Hi.
Hello. Yeah. I actually want to talk about the management of allowed contract and token list. So this is a area that I'm very interested about, and I think currently our problem is that there are always new people come in here, and they just want to list their tokens, but we don't have like a system to manage it. That's why I'm thinking maybe we could build a structure for this. So one basic structure that I'm thinking about is cross margin and isolate margin. So firstly, the list that we're having now is more like the cross margin list. So we should first focus on this list. And about the isolate margin list, that's the area of permissionless leverage. So we could open this market and compete with other permissionless lending markets. But for now, I think we should first focus on this cross margin token list, and we should make like a SOP for this list. So this is a thing that I've been thinking about, and I have already spent some time working on this. I would like to post something like maybe later on the forum. Yeah. And another thing.
Thank you. Yeah. Could you please just before you like jump into another one? Could you please explain this a bit more? I'm not sure I fully get what you mean with the cross margin as a product thing. Like, I get what you mean with cross margin. That's because if you are within a credit account, all positions are denominated into a single total value, right? So all of these positions cross. But so what do you mean there then? So this part I get it, but the other part I'm not sure.
Yeah. So about the cross margin part, it's more like everything in that allowed token list. They are actually a cross margin in a cross margin situation. So basically, if you we have like two different asset class here. One is from lending pool because the collateral assets is the same as lending pool. So basically, and the other is allowed token list. So basically, everything in that allowed token list that is in a cross margin situation. So you can trade into everything in that allowed token list. So you can always trade into them. But about the isolate margin stuff, that is more. This is more like about permissionless leverage. So the idea is basically if you have a shitcoin, so you can build we can build a shitcoin lending pool, and then for the allowed token list, we could use the allowed token list as the cross margin allowed token list and add that shitcoin. So basically, this is an isolated situation. You can only trade that shitcoin into the allowed token list. So in this situation, we can build like a permissionless lending, permissionless leverage lending market. So if we build this market, it could be just same as beta finance or Euler, like every other leverage protocol. But this could come later. And for the cross margin part, so I think this is a part we should focus on for right now, because this part actually the Gear token, we want people to use Gear token to vote, and this Gear token should work like CRV. Like curve token. So that we should first focus on this part, and we should make like an SOP to list your tokens. We should understand what is the parameter that should be voted, and how can you get your token into the allowed token list. So this is like the voting. Yeah.
The allowed token list, how to actually get into that and as a protocol. This one Ilge already put it down, so this will be added to Gitbook shortly. This is not like an issue. This is a good one. You're totally correct.
Okay.
As for the cross margin thing, so on the product side, really, because the Gearbox architecture is so modular, and Mikhail can say a bit more about it. The thing is that you can have one asset pool, but have different credit managers for the same asset. So let's say you can have each pool, but one credit manager will be more risky, one credit manager will be less risky. And you can also have actually different pools for the same asset. So you can have an ETH pool, which is exposed really to credit managers, which are doing all kinds of shitcoins, and another ETH pool only doing the majors. This is this is slightly, you could say, to rarely used pools. But the thing is that this is not, I personally don't believe this is something you can really do at the start, because if you fragment liquidity into many pools from the very first days, before even understanding what your product does, you will end up with no liquidity in any single one of them. So that's another point to the tokenomics here we can touch upon, is that we need to see the feedback loop slightly in terms of like what people are doing, and then to understand where to throw liquidity mining, and based on that already see how users respond to that. Because right now, the protocol gives a choice to loan some of the selected assets that they voted in, right? This 13 months. You can loan them X4. It's okay, decentralized, permissionless. You could short ETH and BBTC and make those shorts farm, but the farming choices are a bit limited now. And the thing is that probably we do need to add a bit more composability to the protocol before really flashing it out hardcore. Because right now, as a user, if I come, I probably, because I have limits, right? I don't have a really incredible user experience, at least from my perspective as a bad trader, because there is not much choice available. So for now, I think we need to build up a bit more adapters and a couple more protocols, which then offers enough to users to really feel the composability. Yeah. Anyway, we can touch it. Mikhail, do you want to add a couple of words on the pool credit manager links and how they can isolate risk, just so others know? Because I don't think this is something we spoke of many times before. Actually, we haven't ever spoken about it. So
Yeah, actually, at the moment, as I said previously, the biggest problem with adding new tokens is about price oracle. And what I mentioned before, that we need a really definitely like analytical team or some research team, which could definitely understand a lot of things there. Now we use Chainlink price oracles. They are market leaders, and a lot of maybe the biggest lending protocols are built upon it. So Aave and Compound use them as a great source for the data. However, it limits us for very, very short list of possible tokens to be connected. And the next problem, of course, is about how to get price for some LP tokens, which do not really, how to say, do not really get some Chainlink Oracle, for example, Curve, LP oracles, and so on and so on. So some part, some group which could work group on these issues definitely could make these things happen. Otherwise, even we could create such different credit managers and so on and so on, we still has no good source of prices which is needed for the protocol. The next part is about how to make isolated pools. I think we should understand, based on liquidity providers, how to find an equilibrium between their interest and for traders who want to trade a large set of assets. Because if you want to make isolated pool, you should definitely deploy this pool contract and connect it with credit managers. But Ivan correctly said that one pool could be connected with different credit managers. I think this feature is more common to make some upgrades. For example, it provides us an ability to make, for example, the new version of credit manager, then disconnect the previous one, and connect the new version, and all stuff which should work. So we do not ask LP providers to disconnect from existing pool. We just change the credit manager for the new version. However, it does not really make isolated risk for each credit manager. So basically, some research is needed to understand how to make these risky pools attractable for both sides. And as I said, the problem number one is to find a good source for prices like price oracles. It's a big, big things which we could definitely work on.
I have a question. Like on launch, why didn't you also use TWAPs or some kind of on-chain price feed as well as Chainlink? Was it like because of lack of time, or because like there were some risks involved?
Yeah, the biggest problem with TWAP, it's like a time window. So as you can see, TWAP. So basically, you can take any function and then try to draw the graph of TWAP. So if the TWAP has a small window, so if you compute the average of not enough data, you could be simply very, very manipulated by hackers and attackers, because it's pretty easy to take a flash loan, to make a few flash, or even make an economic attack. And it could be viable to move TWAP up or down and do some bad things for protocol, which is not good. If you make a large window for TWAP, so for example, you want to analyze 6 hours of data, 24 hours, or even a month, in this case, you can miss a huge price drop. So your TWAP could follow very slow to the current market conditions. And it's why the Chainlink has basically two terms when they update the price. So they have like a time update. So depends on the price feed. They updates it's each half an hour, 1 hour, or even 1 24 hour. And another point that they have like a maximum difference, maximum clearance between current market price and on-chain price. And if this difference is bigger than 1, 2, or 3%, this price should be updated immediately. Do not take into account the gas price and so on and so on. And we definitely believe in this difference between real market price and price which we could take from price Oracle. So basically, Chainlink solution is more robust and it's proven by market leaders like Aave and Compound. However, maybe you heard about the Euler protocol, which built a new lending protocol based on TWAP, and they have some innovations there. Maybe we can really understand how they use them, or even make some collaboration to use some technologies from them, and then we will be able to take TWAP. Otherwise, it's too risky.
Yeah, but even Euler, it uses 30-minute TWAP, and for example, if we looked at price drops that take place in May, we can see that for, in 30 minutes, price can fall like 10-20%, and it's very huge numbers. And in our design, means that actually we should provide less leverage for users. So it's another hard thing, because we should find some equilibrium between user sides and users who want to get more leverage, and other things that we should be safe. So we should provide enough collateralization for the protocol, and it's very difficult to find very best numbers for it.
Okay, perfect. Without dragging it too much into the technicalities, but thank you guys for sharing this one. We do have another chat, yeah.
One thing I wanted to add. I guess we should focus in the next few months on the building some transparent framework for adding new tokens in allowed list, because in the our first list we just put it together and then vote for all the list. I think it should be done more in more correct way. So I guess we should build some framework for valuing risk, for understanding volatility of token, and so on, so on. Some risk metrics, we should understand which kind of metrics we want to look at, build this framework, and all next tokens should go through this framework, so that community can see that, okay, it's safe token, okay, there is some transparent math of how liquidation thresholds should be chosen, and so on. So I think it's one of the main tasks that we should work on in the next few weeks. Yeah.
So I think that's really makes sense. Because what I was thinking about is more like we give an overall structure and then puts different token into that structure. But I think now at this time, it's actually don't make that much sense to build to do this structure. So probably at this time we should focus on, okay, which strategy we could use, and we slowly grow this protocol, slowly grow the use case. And yeah, I think that's really makes sense. Yes.
Okay, perfect. Guys, who is left on the call hasn't introduced themselves yet that would like to? If you don't want to, you can also just write it down later on. Up to you.
I guess I could introduce myself.
Mm-hmm.
So my name's Apex. I've been programming for 9 years at this point, been a full stack dev for 6 years probably, and I've been doing Solidity for a year. I've also been doing crypto for a year as well, and I grew to love crypto from Solidity itself. I just found it a fun language to program, so that's where I come from. I'm a college student as well, so I kind of pay a lot for a lot of my stuff with crypto and like their work. So that's why I'm also here. I really like the platform, and I'd really like to do something for it. So yeah, and I don't know what else I tell. I usually open about this. I'm from Finland, so that's why my accent, and that's why I love a lot of things I do love. So yeah, so that's why my time zone is UTC +2 as well. Oh, 3. I don't remember at this point. What else do you tell when you introduce yourself?
No, that was very lively and nice. Nice to meet you, sir. Sounds good.
All right, thank you.
Yeah, but experience, what you prefer to work on? Because full stack, it's a pretty good skills for Web3 development. As you know, in many cases, when you work on Web2 applications, it's pretty common to use thin clients and do all computations and a lot of work on the server side. But for distributed application, it's not true, because we should put a lot of logic in the DApp. Otherwise, you should run your servers and become more centralized than it's before. And it's also connected with the gas price. So each computation which could be done on front end saves you gas on the smart contract execution. So basically, if you are willing to join as a front end with such a skill, so to be integrated with interaction with smart contracts, I think it's a pretty good experience. Feel free to provide your GitHub handle and things how we could connect after a call, and let's discuss. As I said, we have a huge need for front-end developers and developers who know how to write and make dApps and interact with blockchain system and even understand the difference between Web3 and Web2. But basically, if you have a good background, there is nothing so difficult that you can't learn. So feel free to join. We'll be very, very happy to take you on board.
Yes, as I said, I've been doing Solidity for a year, and I've released a few dApps, some anonymously, so I cannot really talk about them. And I've done a lot of like stuff where I need to optimize on the front end, like literally I need to pack all of the calls on the front end to make them cheaper on chain, cause L2, like optimizations on L2 with this like stuff. And I also usually I say full stack because I make my own like UI libraries as well, because I don't really like a lot of the current ones. And I also make the backend like dApps, and I also make normal servers as well, but I more enjoy making Solidity contracts. So I have GitHub, and I've worked for and I work just it's amazing. Also, let's maybe provide something how you think it should be organized, how to make it really good, follow the DAO goals, and so on and so on. So please explain to all on the call.
Yep. So I just published in general also a list of people who have spoken out right now. And as Overqualified suggested, we can later on open, not a forum, but like an opportunity for everybody else to introduce themselves, what they want to be doing. So this is like a short list of who can be doing what. Now on to the fact, how do you actually, I will cross-reference again the agenda. We are slightly getting over time, I think, but the rest of the stuff we can actually go through pretty quickly. I think from our side, because we had the board of tasks, right, somewhat internally before, it really gives, I guess, up to you and me to make a public version of it, so we can continue working on it
Actually,
together,
it's already
and
public,
then we can.
so yeah. So I guess we can just
The
share it.
dashboard. Oh, you mean the Trello board, or what do you mean?
Yeah. I meant Trello board. Yeah, it's open. Yeah. It's
Okay,
open.
so I will create a separate Gitbook page for others maybe to see, or a forum post maybe, either one or both, so that others can see like what are the focus tasks now and suggest focus tasks themselves, or jump into the ones that are there. So that could be, and then ad hoc we can organize either working chats within Discord, I guess semi-private to really make them working chats, and also maybe do calls to really get everybody together and talk about concrete stuff. Because now we talk like an abstract, right? To get the things going. Yeah. So that's for later, basically. Does that sound fair?
Yeah.
Okay, sounds good. Yep. So that basically refers to the other two things in this first section, which is roles and decisions of activity, directions, and backlog and ideas. So those are somewhat there. We'll just work in the next few days to actually compile them properly together. So if you want to work during New Year's, it probably will also be available then too. DAO coordination tools. I guess we could touch upon that. Personally, not a fan of many tooling. Like I know people like to install 5 different sources, and literally all time they spend is just maintaining those dashboards. I think a couple of Discord channels, which are semi-private based on the contributor level access, could essentially be enough, and then everybody maintains their own ledger of those things. And of course, Trello boards for the developers. But otherwise, I think a weekly catch-up or even bi-weekly will be enough to really keep up to date on everything. Or have you guys preferred any other DAO coordination tools that you've seen, or just team management tools, whatever you prefer?
Not really. Usually, sorry.
So sorry for that. I've been using Notion quite a lot recently, although I'm not like a Notion guru, but I know people who can structure Notion workspaces really well.
Cool. Yeah, Ilgis uses it for quite some things too, so he's a fan of Notion. I honestly have such a small brain, I still don't understand how that functions. Okay, Notion doesn't seem too complex. I think many people are already familiar with it. And Trello board for devs, or whatever the devs choose. I'm not a dev, so I can speak for them. Do you guys prefer to use like a combination then of Asana, Discord, Telegram, Signal, all of the other stuff? Or do you prefer not to do such a mess?
I personally just prefer Discord. Like usually in these devs, they either create more channels in the main server with only the devs, or just create another server for only devs. And yeah, I just prefer Discord, honestly. I don't like. I use Telegram sometimes, but not really, and that's it. It's just easier to be on Discord.
Yeah, and basically we should also make a good communication via GitHub, because it's great source of putting bugs there, talk about new features and so on and so on. Maybe it's even much better to make all development transparency and public. So each GitHub repository has an issue tab, so probably a lot of stuff could be discussed over there. And if could someone add some ideas or bug information there, it will be really, really good to track and fix them there.
Okay, sounds good. I guess that closes up the topic on DAO coordination. Literally starting off with a couple of chats should be enough. So for DAO coordination and getting the first contributors together, I guess the actionable point would be for me and Ilgis, compile a list of goals and publish the focus points basically, and then after that make chats and get an ad hoc contributor calls. So that would be dev and product marketing, two separate ones probably. Yeah, you can either make new Discord chats or stay in the same ones, but just give durations and have hardware duration there. So that's easy. Okay, cool. So another thing for, I guess before we jump into tokenomics, which could be the last fun discussion, let's first touch upon integrations on management of allowed contracts to token list. So as Luis mentioned, he already made a list of those things, let's say an article. For that will be added to Gearbox so that other founders and project owners can literally see that in other DAOs and see how they could collaborate with Gearbox DAO. So that's one. Ilgis, was there any other kind of thing that you would put in thought into that point, number 4, or no? Or was that basically it? And that adapters, Mikhail is writing some content on that as well. The Gearbox need to be revamped, but otherwise that's going to be related to this as well.
Yeah, as Mikhail said, building integrations, the hardest part is not writing code because actually it's not very huge number of rows, yeah. But actually a crucial part is to be sure that design of adapter is safe. So actually it consists of 2 parts. First part is like writing code, and second part math part and understanding of DeFi protocols. So I guess there should be some like internal working group which working on designing such kind of adapters and so help Mikhail and other developers to build it.
Hey, could I add something real quick about adapters?
Yeah, sure.
Hey guys, Chimera. Been working on AE2 pool staking protocol, and you're in adapters as well. So with adapters, I sincerely think that we should have some kind of like internal pools, internal working groups, robots doing the same shit that lets internal like team members and the person who wrote the adapter stake into it first and then put it up robo, because it's not just about trust, it's also about like optics. Like it's not cool if you put out an adapter for Uni V3 when a lot of people investing in Gearbox are from Curve, for example. And the difference in APYs is something less than 10%. But at the same time, I think maybe we can have these adapters that are very open, like, hey, anyone can deposit into it if risk, if you're the developmental team, and then just stick it up on Snapshot.
Oh, you're talking about the strategy of how Rari fuse pools basically work, right? Because I remember a case where somebody launched a pool and they used Oracle's swaps of a token that had like 100K worth of volume, but they still created it, and some people got not rugged, that's not the correct word, but lost their money, the LPs, right? And the response was pretty fair. They said, yeah, this is just like you're utilizing the architecture in the wrong way, but still users of the protocol get hurt, kind of. So in a way, this can be done so that other communities, let's say a DAO would want an adapter for itself, right? And they will market it essentially with their own effort. And Gearbox DAO can be like, listen, this is not safe, but you're free to do what you want, right? It's a modular architecture. So are you mostly saying about that, or did I misunderstand, sir?
I think you have a great point, actually, that I didn't think about. When I said adapters, I actually meant both of those things, right? So I think it's up to you, Ivan, on how the best path forward is. Like, is it possible for Gearbox to mark adapters as community and voted in by community as safe versus community plus, like the developers, right? Because obviously the developers in the community or, investors, yada, 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 they could qualify adapters adapters as safer, right? Like you would have different tiers of adapters. So that's up to you, but I do think it's nice to have the early access privileges and then have kind of like safer adapters that anyone can ape into.
Yeah, I understand you. I think when the product, if and when the product reaches a state where you could actually be looking at this potential bigger market acquisition, that could be done. For now, it seems like there are quite a few adapters that can be built without going into the risk zone, really. Like probably farming on convex, granted their pools are very, very similar to Wire, essentially like being a semi-fork or like a full fork, at least at the beginning. Probably as an adapter to that is not too complex and that will offer high APY. Curve LP pools, similar to Uni. Actually, no, they are probably simpler than Uni LP pools, but those are also something that could work mathematically speaking. As far as I know, I don't know math myself, and they don't have to really endanger users. You know, the other things which are actually dangerous from the adapter perspective, that like it could not be built properly, but sure it can be a risk pool and whatnot. Those can still be done. I mean, if you really see a lot of influx, right, of other protocols willing to do that, can probably talk about it. But for now, it will still be the outreach of a small product trying to grow. So I don't know if that's an immediate concern, but I do agree with you that a thing where some adapters are classified by DAO as safe, some are not. Different risk parameters for pools can be established by the DAO. The DAO could also be spending more time on ensuring one pool over the other by showing its preference to one or the other one or the other one. So depends.
Oh, like super quick, I'll leave it to you guys after. But like I've tried to write some year strats, and based on those, what I've come to realize is like even with what you call state pools, like the curve single-sided deposit pools, like from a programmatic perspective, it's super easy to just like dump one-sided tokens into them, but there's still slippage, so you still need to like consider that. I'm curious if you want to expand on that. Like, would you let's say I have like WBTC, and then there's like a leverage position for, let's say, like RIN WBTC, how will Gearbox handle that? Like, are you going to prevent slippage in case, more than 1 to 10% of the pool? How are you guys going to handle that?
Good question, Mikhail. What do you think? So, Tamara, just to understand it properly, you're talking about when even the one-sided people still have slippage because of the stablecoin underlying fluctuating, right? Like an LUSD sometimes they show like 0.1% even deviation. Is it that?
Yeah, like when we already know that the protocol is safe, but we know that there will still be slippage that may potentially be severe.
Isn't that an issue?
Probably.
Because from what I understand in the current architecture, if you incur slippage when you swap inside the credit account, you would basically just decrease your health factor more or less, and if you incur too much, you will just get liquidated.
Yeah, you are right, but basically there are a few things which should protect funds and so on and so on. So basically, on the first thing, we have a list of allowed tokens, and some tokens could be forbidden. So if the token is forbidden, you even can't make operation which result will be in such a token. So for example, if you want to using Uniswap or even APY on our smart contracts to swap VES, for example, for some shitcoin, it's totally forbidden because this shitcoin is not in a allowed list, and it's why this operation will be reverted. The next point, after each operation, we compute health factor. So basically, if your health factor is around 1 and you want to make an operation which reduce it, and as a result, it will be less than 1, it's also would be reverted. So you can't deliberately make your health factor less than 1. And it was fun when a few guys connected me and asked, okay, we are building liquidation bot and we try to liquidate ourselves, but we can't because we do some swaps on Uniswap. And if this operation and result make health factor is less than 1, so we want to liquidate such an account, it's forbidden, it's reverted. And I said, it's totally true, because we should control that you have enough funds to pay the pool loan back. But of course, the majority things happens when all this stuff is changed, basically for prices, which could go up and down, depends on market situation. If your health factor is less than 1, even for 1,000, your account could be immediately liquidated. And of course, it's why we started with such small caps. We want to be ensured that liquidation works pretty well, fast, and we could be really trust for such a part. Because if liquidations are too late, if they do not have enough economic reasons to do, and so on, we should definitely understand, is it a good idea or not. So basically, for your question, it's another things just to consider about adapters. We should also think about how many tokens could be allowed for one credit manager. It's an also open token now question. Now we have 14s, but each token during the liquidation should be converted back to underlying asset. It's a common pattern for all liquidators because they are not willing to take this risk. So we should be ensured that there are a lot of economic intentions for them in terms of gas price to do so much swaps to get and finalize this liquidation. So basically, as I said, we should talk about the gas cost to open LP tokens and so on and so on. So a lot of things concerning LP tokens, but all of them are solvable, but need research. And as I said, it's not about holding things. Writing adapters is not a big task. It's more about computation, understanding costs and economic values for all participants there.
Okay,
Yeah,
so
actually-
imagine you're putting into a two-sided curve pool. And let's say your deposit makes gas costs insignificant, so we can ignore that. Let's say gas costs $100, but you're putting in $1 million with Bitcoin into the curve rent pool. What is the maximum I can put in? Let's say there is $2 million in the curve rent pool. Am I able to put in the entire 1 million in Bitcoin, or should I hedge that somehow, like put in less?
Now curve pools are not connected. So basically, you can't put money in the curve pools at the moment. You can use on the curve. And it's also yes. So basically, all LP. So as LP tokens, we just work with wire tokens. They have a really good APY and it's gas efficient. The problems with Uniswap E3 that you will get ERC 721 token back. It's like an NFT, and it's pretty difficult to analyze them because the basic system works with ERC20, which is possible to use for Uniswap V2, for example, and it's also possible to curve pools, if I remember correctly. And of course, building these LPs requires a lot of research to understand all possible risks concerning price changes, price drops, and economic rewards for liquidators. So, as I said, we should put focus on some factors and how to make the thing safe and appropriate as
actually very positive. Should be and
so we learn from that. Otherwise, the point you were also referring to when you're literally the majority of the pool, right? That is something that Gearbox will really need to grow into. First of all, you have the same issue with, let's say, if Gearbox adds half a token or 1 each token, and then let's say the bear market hits, right? And a lot of the liquidity can basically disappear from there. So then Gearbox people who trade in might actually be the largest ones. So then it becomes an issue, right? So at first, you just simply don't add the low liquidity ones because you can't afford that risk. Your risk is not isolated yet. The protocol doesn't know how to treat that. So that only becomes an issue once you really look at those. But there is still plenty of stuff that is like highly liquid. And also the pools, the limits on Gearbox credit accounts likely won't be unlimited, right? Same as what with Maker, Ava, and others. There is a max you can take. And yes, so maybe it would be 1 million at some point. So your question still stands. I like it. It's basically the focus group needs to decide on what. Yeah.
I mean, I'd love to join the focus group, but I also think Mikhail actually did a great job answering my question because it sounds like you're building on top of Yearn, and like I'm trying to be a strategist for Yearn. They've already done a great job of kind of like divvying up deposits. So, you know, let's say there's like mil going in, like a majority portion going in to Yearn. It's not all going to go into a pool that gets slippage and fucks you over. Sorry for swearing. In case there's anyone under 18 over here. But yeah, so like if you do deposit into Yearn, you are already protected from a lot of that slippage and downside. I'll bet you are also protected from some of the upside. So all I'm saying is like you'll be safe.
Okay, cool. Sounds good, yeah. So I added you on the list as well for the focus group, so we can, I guess, could help sync up on it later on too.
I just want to say that very valid concern that Chimera just brought. I'm sorry, I just managed to be able to speak, guys. It's a little bit late for me, so but very fast to introduce myself. I'm Cheshire. I have been working in crypto since 2015. Bonding curves, Bancor, liquidity mining I started doing in 2017 and 2018. Transaction fee mining back then was a very big thing in exchanges, which is basically like today yield mining, yeah, but back then it was for centralized exchanges. Super interested in the token economics of Gearbox, mostly because it's a blank canvas and a DAO first approach. It's very interesting for me how this is going to shape up and how the token economics are basically going to align with the growth of the protocol. And from that perspective, I'm a founder of a DeFi project myself, which is connected to interest rates. And I do think that there are a lot of inefficiencies in credit market and interest rates right now, especially on Ethereum. And I see that Gearbox can play a very important role in balancing those markets and making them basically more liquid and more stable. So basically to allow people to just provide their idle assets there, and then to allow other people which are like bigger traders and bigger miners to utilize those free assets and to extract those profits, those inefficiencies that are currently sitting in DeFi. I just wanted to introduce myself super fast.
Oh yeah. By the way, I started ShareStake. If you guys want, we will give you preferential rates on staking validators.
Okay, cool. Thank you. Noted down all of the recent ones. Okay, so that's with regard to management of allowed contracts and token list. Also made a recap and the general if you want to see again. As for the airdrop for the Discord users and the testers, we came up with a simple bot logic. I mean, it's a 5-minute work really to get it out later, probably like in 2 weeks or something from now. Just because Mikhail is busy with all the liquidity bot things and really gets in the thing to survive on mainnet, which is a ton of work. So that's not like a first urgent priority, but it will be fixed soon. So then the bot will just take your address, and if you send the address, the bot says thank you. If you are not on the list, it says sorry, you're not on the list. That's very simple. So yeah, please just give some time on this one. It's not a complicated, just time-consuming one. So let's do it like quickly dive into tokenomics. I mean, difficult to dive into it, but let's say a couple of opinions from each side, right? And then we can wrap up the call to not make it 2 hours. So it's already 1 hour and a half. Thank you for everyone for sticking by. Okay, so there are a few things with regard to tokenomics. There is the transferability of the token and then the token model plus liquidity mining, which are very much intertwined. So at first, honest opinion on the transferability of the token. Right now, it doesn't make sense to me whatsoever. The protocol has just started. There is not much liquidity. We don't know yet how to incentivize that liquidity because that depends on the token model. So up until it's there, I don't think there is any benefit or merit to making the token tradable. Because if it trades but doesn't have a token model, it immediately gets like a suspicious look from those who might be potentially interested in it. And then it also makes the DAO look weird because the DAO launched the token for no reason while they could be working on the product instead. And don't underestimate the amount of flood that will come in when the trading starts, because for the next week after that, all of the dumb questions about exchanges, where is the CEO, why is the dev not doing work, and blah, blah, will be coming in. So I would say up until we figure out how we want to incentivize liquidity on what side and how the token model could approximately look like, I personally would vote no for transferability of the token. That's one. So do you want to guys quickly do a round if you have an opposing or supporting opinion? As soon as we get done with the transferability of the token, we can touch upon the models which Ivan also wrote as a summary, then also overqualified it, and a few others of you made like summaries of what token models they like. So what do you think on transferability first?
Yeah, I can speak to that. I agree with you that, yeah, if we make it transferable, that invites just a whole another wave of people we need to deal with that makes all this initial DAO talks unproductive. So like we need to start working and stuff. The one thing I'll challenge is the liquidity mining and liquidity is that, like, let's say we figure out our tokenomics and stuff. I guess the question is early on, do we really need liquidity mining and a large liquidity pool? Or can we just let, like, if we're really only using the token to the DAO to like pay contributors and for people to either like exit, like let's say you get paid and you're like, I need to cash out, like you'd use the pool for that maybe. Otherwise you'd probably just accumulate gear tokens. So I guess the question is, do we really need a huge liquidity pool once we make it transferable? So I almost think that's not really a consideration.
I would like to plug in here. First, I kind of disagree about the transferability, and it mainly, my main disagreement comes from, like, right now the people that basically have those tokens are the credit account miners, yes, and those guys are a very small percentage of them are actually going to engage. Of course, majority of them are just going to be waiting for when a liquidity event happens, and it can be months before we make the token transferable. That means that I got involved into that project. A big part of it is because the moment that I became a liquidity miner, I kind of became like an owner of that project, yes, and I feel attached to it. So I'm willing to contribute, not specifically for my bag, but because I already have a sense of ownership. If you do not allow people to actually get that same that sense of ownership, then of course, like, we're not going to attract that many new contributors. Yes, because like, well, what is the circle of crypto? Yes, you get a lot of speculators, and then you convert. Even if you convert a small percentage of those speculators to your core users, that's already considered a big success, yes.
sure, for sure. But what you're saying is that transferability can be technically granted to the DAO, at which point DAO can do liquidity mining actually in lock tokens. So you still are able to give ownership and get more people a stake in the protocol, basically, without making it transferable. But what you're saying is that you got a hold of the token because of liquidity mining. So up until we have a model of liquidity mining, transferability by itself in an isolated fashion doesn't help much, right? So I think I would say you reconfirmed the point.
Personally, right now, I don't find like needing the transferability too much. Like currently, a lot of the people who have the tokens are interested in building it. So and voting, the voting seemed to turn out pretty well. So I wouldn't like right now worry about transferring a lot. And about like liquidity mining, a lot of projects who do liquidity mining for LP with token usually get farmed and then dumped, and there isn't too much incentive. Maybe there's some like measure we want to keep like small percentage to that, so we get some liquidity, but that's still another debate. Another point I want to make is at some point we might want to incentivize like this other services to use our platform by like giving token or using the actual product. And a lot of if we incentivize this for like other protocols, it might make sense because they don't want to dump them initially. They want to use it for their voting, etc. So let's say we give what platform would use this? Let's say something like Olympus DAO. They use our platform to leverage some of the treasury to then farm that so that their treasury with growing value. We could like there could be a somewhat there could be incentives for them to use us by giving some tokens, and they wouldn't necessarily need to dump them. How like Convex doesn't dump all of the like curve they farm. They actually use it back in the governance to then get votes for their gorges.
Can I go next, or does someone else have a speech?
Go
for it.
Yeah, super quick. So I think we're 3v1 right now on making it transferable. I'm gonna be super honest. I came here to farm and dump it because I got robbed, man. I need the money. Please, I need the money. Please let me transfer it, sell some of it. I will happily put up my share stake earnings to incentivize it for the first week or month because that's when we see the most liquidity. But I do think the people that are against it have a very solid point. I'll still be here supporting you all, and so will all the other protocol creators if it is transferable, even if we're not holding a massive amount. And I also want to speak towards the point brought up by the last speaker. What was his name? Alfax? What's your name, dude?
Afax, whatever you want.
Yeah, AFAX. So what AFAX said, he had a brilliant point. I do think protocol-owned liquidity is kind of like, becoming the future. OWN's a great example, but I also help BFAT with 100 Finance. I can help you guys as well. You can fork the code I wrote. It's basically just the curve voting code. And I do think you need to make it transferable to allow people to vote on stuff, right? Like with 100, you can go and vote on different stable coins, and the incentives for the stable coins for people to deposit them in, which has surprisingly stabilized the 100 Finance governance token. That's all I got. Let me sell it so I can feed myself, and even if you don't, I will still help with getting.
I'll still sell OTC.
I'm so sorry, but yeah, I'm fuck.
No worries. You are still not disagreeing though, because you are saying there was a token model and other stuff to actually balance it out. So I mean, honestly, this is a DAO, right? So things can be put to a vote. We're just expressing our opinions of what we potentially would vote on or not. I would personally vote against the transferability, but because of the reduced multipliers, my vote is not as big actually as you would think. So in that case, I would just say if we have a token model or LLM in mind, it would make sense to make it transferable then, because then the APIs are visible. But in the case like how Ribbon did it, it also helps the community if maybe part of LM is actually illiquid to an extent. But yeah, it doesn't have to be
I
for
think
half a
so.
year.
And
So
like, I do think a lot of the tokens right now are illiquid, right? Because like we see all these massive votes, but as you said before, a lot of the votes are coming from illiquid parties. So even if we make the token transferable, all we do is distribute it to other people and allow a lot of these speculators and others to take part in the tokenomics and potentially invest in the protocol, boost up the TVL. Because you guys have investors, but there's a lot of investors that have been on the sidelines that want to jump in.
Can I?
Yeah, sure. Go ahead.
Yeah, so I guess 2 points. FX mentioned that we all know at this point that liquidity mining is essentially dumping the token, and you're getting temporary liquidity for it, and that's what you need. And I guess I just want to challenge that. Like I agree with Chimera's point that we there are a lot of people who want to dump. And there are a lot of people who also want to accumulate a lot more gear tokens. I mean, this initial distribution is nice, but like personally, I want to get a lot more. I think there are a lot more people who do too. So that being said, I think if you made the token transferable, you'd probably have a mix of people dumping, mix of people accumulating, all that. And I think where Ivan and Chimera are kind of saying the same thing, but not, is Ivan seems to be saying like, Ivan seems to be worried that we all want to make the token transferable right now with no plan. And then Chimera seems to be worried maybe that people want to like wait 6 months to make this token transferable. And it feels like we're all kind of saying the same thing, where we want the token to be transferable, not in like some crazy amount of time. It's something we want to happen. There are benefits to it, but we need to have more in place, such as liquidity or a plan for the tokenomics or something, before we do that. And so that means it's maybe more of like a few weeks, a couple months, not like some crazy 6-month timeline. And I guess my last point related to that is with liquidity mining. Again, that's one way you can distribute tokens to new people is with liquidity mining, but it is often going to be dumped, and it'll be dumped into whoever is providing liquidity. But I again just challenge the idea of if we even need liquidity mining, or if once we have a better idea of what the gear token is going to be and what it's used for, and just the idea that there is a reason people would want more of it, can we just make it transferable and let the market create a pool for it? I mean, similar to what Bankless DAO did, similar to what some other DAOs did with their valueless governance tokens. And then that way, it's just creating a way that people can dump or accumulate more, but it's only happening with already owned gear. The DAO's not actually selling any gear to do this. It's just giving the market a chance to redistribute to people who want more and don't want it.
The way I understand it works right now, Ivan can probably correct me if that's wrong, but transferability is not like totally disabled, but it's sort of whitelisted, right? So you have some contracts that can that can transfer the token, but you can't transfer it generally. So maybe we can actually like have our cake and eat it too, in the sense that if we want to distribute gear to more actors for governance purposes, but not have it traded, like quote unquote, we could have some kind of a liquidity event that maybe would allow like some people.
No, I think you can already delegate it to people, right? Because there's some people voting with mass amounts of gear, so you can definitely delegate it.
Let's say it's a situation where, for example, like I like didn't get like on Discord or CA or something like that I want to get a gear token just to participate in the protocol, right? And in order to do that, I either have to have it transferable and tradable, or maybe there is like some limited liquidity event where I can get that token as well. but it's not non-transferable yet, just so that you can.
Yeah, so that is technically possible. Yeah. Anyway, so I agree with you on this. The transferability, indeed, I just wanted to re-emphasize overqualified's point. I also don't want it personally to be 6 months liquid. It doesn't make really any sense. I just don't think it should be in a week. So honestly, like a month or two max probably would be the tentative logical thing. Because for now, we had a few cool proposals from Ondo. We can look into Faye. We can look into what Frax enables. We can look into other stuff. So once we look through those proposals, and calls, which takes maybe a couple of weeks, it could even be done after that, right? I don't think there should be any problem with regard to transferability, just not like today. So I agree with your point. It's not 1 year journey to scale. I don't think that would make any sense. It's for yeah.
Can I just quickly add something? I'd really love to see Gearbox be ambivalent and allow many different protocols, including Faye and Frax and whoever else, take it up and take it up instead of playing, winner takes all. Just for the sake of.
You're saying divide.
That is costly if you have a few protocol. Like it will get costly eventually if you engage a few of them at the same time. Sure, it's cool, but the DAO can only spend so much. It wouldn't give 10% of its treasury just liquidity money in the first half year.
No. I think it'll be cheaper for you, my dude, because you end up getting multiple players kind of like playing the same game and offering you best rate, so to speak, right? With Sure's sake, we've considered engaging Olympus DAO and Faye. And, I've been in their communities, been invested in them for a minute. So I've looked into it. And so with, I think Faye, I think it's like a 5 or 10%. With Ondo, it's like a 5 or 10% interest rate, which is nominal compared to the 10,000% we were given out. With Olympus DAO, they take 3.33% of whatever you raise. But obviously, you're giving the tokens away to the people that buy the bonds. And then you also give 2.33 to Olympus DAO. And, I've kind of gone through this because it hurts me to say this, but Share Stake is it's kind of a dying protocol at this point. So we're just trying different things. So I think instead of going all in on one, you can do limited trial with several different protocols. And Curve does this. Curve's contracts, they have 1 week long distribution cycle, where Curve puts in a 1 week worth of tokens based on the total TVL today. So if the TVL is 1 million, they put in enough Curve tokens to have 10% or whatever X% for the next week. And I think you guys can do the exact same thing, try it out for a little bit, and then evaluate from there based on whatever got you the most TVL, the most, bang for your buck. The bang for your buck may not necessarily be total money, total TVL. It might be, advertisement, because there's people like me that got into Faye early on that will, put in some Faye gear liquidity just for shits and giggles, or people that will, vote on the Curve proposal to put Curve tokens towards the Gearbox pool if you end up having a pool, or even just protocol creators that end up creating
I got it. That makes sense.
And incentivizing it just for, just for shits.
Yeah, honestly, I agree. On the just general on the first point, I when we get a good tokenomic what we want to do, I'd be totally up to just enabling transfers. I don't really personally have a mind I don't want to just wait an ambiguous amount of time. I'll do it once we have a plan for the token. And for the other point, like I really think doing something like what Curve does is a good idea. Like how they have their gauges and people can vote on them, and a lot of protocols have just started accumulating the Curve just to vote on those and just to get like their share of the pie they want. Similar to like let's say like Yearn, they have collected a lot of curves, so they get one better rates, and two, like they can incentivize people to vote on the pools they want with curve, or like Cream does this, for example, or Pickle Finance if they do it. I don't remember anymore. That platform's dead at this point. But something like this, like we should incentivize people to either hold out tokens to vote for like how we incentivize them to use our platform, or we have like locked Gearbox, for example, which then also does the same effect. Like they get more from this pool for having locked tokens in their system that also have a part in governance. Kind of what Curve does. I really like what Curve does. I'm just gonna be honest.
Yeah, I think a lot of people like it, and I think the discussion we've had up to this point is like, we all like Curve. Curve is great. Gauges are cool. What part of the Gearbox protocol needs a gauge or a gauge or however you want to say it? And there are places you could put a gauge, but in a lot of places it's kind of unnecessary. Like it hurts Gearbox. So the big challenge will be like, we love this like vote lock Curve tokenomics, but Gearbox is not the same protocol. So is there something in Gearbox that it makes sense to have people continuously need to vote on and hold the gear, some sort of parameter that doesn't actually harm the protocol by creating that restraint. So I think that's going to be the creative solution we need if we want.
I suggested it first for like distributing gear, and I'll still keep like doing the point like we wanna at some point incentivize usage of the platform. Of course, the platform and the leverage itself is already a really good thing, but to incentivize platforms and these bigger protocols to integrate it, we also have to kind of give away the token for using it. So for that, I'd use the gauges.
That's that cost to switch where
Do you
it's
see
like
that?
Gearbox maybe.
I'm not sure I understand.
A lot of users.
Other protocols don't need to. Sorry. I want to say I don't understand how the protocols need to integrate Gearbox. They actually don't. I mean, they could, right? But the integration really comes from Gearbox first. It's the adapter and the votes, and the other protocols don't need to know Gearbox exists. So what do you mean with incentivizing other protocols?
I mean, like having, let's say, this platform with, let's say, 100 million TVL use Gearbox to like leverage farm other platforms, or like let's say we have Olympus DAO using some of the treasure with Gearbox to farm something safe, or well, relatively safe with it. Because, like, of course, people are going to use Gearbox themselves. There are going to be rich people who are also going to use it to leverage farm places. But honestly, if we really want to get those fees and really want to get that integration, we have to have DeFi platforms themselves integrate or, like, use Gearbox leverage themselves. Of course, we have to integrate different platforms so that they can use Gearbox. But, in all honesty, if we really want that better TVL, we want platforms like Olympus to deposit their treasury, or whoever would it be in this case.
Okay, sure. Like while you're part of the program, you're referring to something like that, right?
Yeah.
I also
makes sense.
One point I wanted to make is in the econ discussions thus far, a lot of people proposed gauges in mechanics that seems like sort of gear becomes its own playground, right? That's completely separate from Gearbox as a whole. So you have like Gear as a product with its own tokenomics that do not really mesh with like Gearbox core business model, and then you have Gearbox. So it feels to me that if we just do gauges by any means necessary, we can end up in a situation where everybody cares about Gear from the tokenomics standpoint, but nobody really cares about Gearbox at the same time. Like nobody votes for a DAO or something like that.
How would you make gauges here, gouges on there? Yeah. What is the idea that you guys have in mind? How would you see a gouge work here? Because just one thing, there is currently no way to put limits. Like you cannot like only use 1 million on Uniswap. Like it could be done, but that seems like actually unsafe from the architecture perspective. So let's consider probably this and know like how otherwise can you do gouges.
So Actually, I think this question leads to the question of allowed token list, because if you think about curve, there's a demand for curve tokens. This demand is a stable coin that they need to make some usage for their stable coins. So in terms of Gearbox, so so what we could control, what people should vote is this allowed token list. So we need to think of what kind of demand is there. I think the demand is for people like Olympus style. So actually, every governance token, the people want the other people to go to speculate, to go long, to long their governance tokens. So this means if you want to be added to our allowed token list, if you want other people to go leverage long your governance token, you need to come vote to make your governance token in
That already
our
works
protocol.
though. It already works like this for but it's already GIP1, like the allowed tokens, sorry, GIP2. That was already like that. You had to vote in the tokens. So I'm not seeing like how that is gouged. That is just only for apps and protocols.
I think I know the mechanism that could be used here, but I'm against the idea in general. Although I wouldn't go into it right now. I would rather discuss this in the chat.
Yeah. Hey, good quick. I just want to say, Pleb, the issue with that is protocols can just buy gear, vote for their token, dump it. There's no reason to keep it.
Yeah, the thing is that if you actually give protocol, if you do gauges in that way, like one of the ideas to technically do it is, let's say, give it based on the volumes that they used on the protocol, and then based of that you could give tokens. But the thing is that with Wire and with Convex and Curve, it works because a part of it goes to the treasury of the protocol that stocks it up because it needs it continuously, and the other part goes to users as APY, who they usually sell just for USD, right, for the notional. Here, the thing is that the only thing that's possible is either all of the tokens go to users directly, which pretty much just becomes a subsidy for using, which actually is okay then, or it fully goes to the DAO of the protocol, which doesn't make any sense because users are not getting anything extra, so why would they be coming in the first place? So yeah, I don't fully yet see how a gouge makes sense, but I don't have too much context more.
So maybe we could put like a limit. If you vote more, so you can get like more tokens to go. Yeah, okay.
That's like unsafe because you create limits. You cannot trade in and out of positions. You create the issues of liquidations probably. Yeah. Or if you want to, what if your position simply grows in size? Like what if you just grow in size or like get stopped? So yeah, this I see what you mean. Yeah, just not sure how to do it.
Makes it harder to use that too, right?
Another idea is like. Yeah, another idea is like in Euler finance. So basically, if you want to put your token as collateral, and there's like a collateral factor there, so maybe you can vote to get your collateral factor like more safer in some kind of this. So this is the other like enriching is leverage.
I mean, this is a parameter that the governance of Gearbox can work on. And yes, technically another protocol can stock up a lot of governance tokens and vote for a high liquidity threshold for themselves. But it essentially creates an unsafety in the system because you're telling that a collateral, which is programmatically, mathematically speaking, is somewhat shit, you allow in a very safe VBDC style health factor for it. That would actually be bad for people's. So, I mean, one way you can go about it is another to give you guys an idea. Similar to rare refuse pools, you could also be saying like, hey, another protocol, you can make an adapter plug in here, and then you incentivize your own thing. We are not responsible for that. Again, this is a tricky optics question, but it's still not a gouge system. So there are many cool systems and ways to utilize gear here. I'm just not sure where the gouge is coming in here, at least in the current architecture. Not seeing it.
That's kind of what the discussion has gone towards so far is like that you're just kind of copying Curve for no straight reason. And I also kind of challenge and wonder how much of like Urine announcing their new tokenomics, how much of Curve's tokenomics working are the fact that they just have a lot of revenue and they're going to share it. Like do we just need to focus on building a bunch of revenue and sharing it, and then maybe some more tokenomics?
Yeah, just build more adapters. Yeah, exactly. Could be that. One thing actually, so for liquidity, just like a couple of things for creative ideas for you to think about. When you count liquidity mining for Gear token itself, sometimes projects used to just do like incentivization of Uniswap V2, right? Something like that. Ribbon did V3, and I think most of the rewards were basically taken by two professional market makers. So then the community got part of that. Now there is a way to do it on the finance, as you see in the proposal. Right? Because if you borrow money or give liquidity money from the pool, usually your rates and the amount of money you have to put in terms of gear is much lower. So you can think of it either doing a community liquidity mining for gear or really utilizing another protocol doing it. For example, Ondo with Fei, what they did, but the proposal wasn't gear econ. You can look at it. It's for the protocol liquidity mining, really liquidity in the pools. The thing is that liquidity in the pools being very big is important because the more liquidity there is, basically curves, the lower the borrowing rates are. The lower the borrowing rates are, the more attractive the product is for traders. However, then you can start thinking of whether the traders really want the attractive fees because they're comparing funding rate to this, or traders just want this product because they're tired of FTX and Binance maybe. And that could be a good reason that people are ready to pay higher fees. Like we are all paying Uniswap fees, right? The last time I traded on Binance or any other centralized exchange was like more than a year ago. While the fees I've spent on DEXs are idiotically astronomical compared to what CEXs offer. So it could be that the rates are not. The rates might actually be not a deciding factor here because if there is enough composability for positions, you don't really have to worry about the rates. That's an option. But still, more liquidity in the pools is important. Incentivizing liquidity in the pools can be done very simple, right? Very simple, regular element. Very low, that's it. But then, even if you have liquidity in the pools, you still might not have traders. So doing a huge liquidity mining right now might not make sense because there are not enough adapters. The product now is long short something, long this coin, farm in wire only in the lowest fee pools, not that much, right? So even to get 100 MTVL here, I'm not sure how a potential user would even benefit from such a product because they'll be like, there's a lot of stuff that's missing. So maybe it makes sense to build a couple of adapters first to then get the flow of users who then really see something comparable cool. Because of that, the liquidity mining could actually be thrown on the borrower side because if you incentivize borrowers and you essentially repay their funding rates, with gear somewhat like that, so that it's negative borrowing rate for them, you are, as a result of that, you are increasing the pools. As a result, you get more liquidity liquidity providers on the LP side. So then you're achieving the point of having more liquidity in the pools and more users, but you're incentivizing users to indirect bring liquidity providers. And that's the difference that can be done here. Anyways, the context, I am done.
Yeah, I was actually going to say something very similar. I think part of what FX was getting at, or maybe not, but what's related is to use a new protocol takes some effort and some time and some cost of potentially losing funds because you just mess up transactions and stuff like that. And it's risk. So like even if Gearbox is a better strategy, there's still a cost for a new user to spend time to actually go use that new strategy. And so the three things that help with that are, one, just creating educational content of here's a step-by-step guide on how to use this strategy. Two is new adapters, more strategies like Ivan mentioned, because that just is more addressable market, more people that may come in and learn Gearbox. And then three, yeah, you could do liquidity mining on the borrowers to kind of incentivize people to spend the time to come over and learn Gearbox. Because if you do that for just a month and get a bunch of new people to try it that month, then you've solved their like migration debt or having to learn new stuff. You can take that away, and at that point they know how to do it, so they'll just keep using Gearbox. Related to the lending rates, I do think it's good to have, obviously lower rates are better, more people will use it, but I agree we all use Uniswap because it has more opportunities than Binance. I'll pay to do stuff on Uniswap because there's just so many more things I can do, and Gear has that same thing going on. But I do think so maybe we don't need to incentivize the lending pools, and that's probably something we look at on a case-by-case basis, but initial results are showing we don't need to do that. I do think the DAO should deposit our revenue into the lending pools, which is currently the plan. And I do have an idea related to that, but I can discuss
It's
that.
technically the plan, yeah.
Can I just...
Yeah, so the DAO depositing back in the pool the revenue, that's already a technical thing. Yeah, sorry, just wanted to confirm there. So the DAO doesn't need to decide anything. By default goes into the digital tokens.
Cool.
Hey guys, Nick here. Just a quick question. Ivan probably cover this up. I mean, with the transferable, I mean, I'm against it at the moment because there's two levels to it. It's a sort of marketing TVL increase in itself, or it's in order to value the treasury. So on that last note, you might be able to give us some idea of runway because I'm sure you guys have got some actual bills, servers, outside contractors, etc. Do you have a rough runway with current funds, etc., which would necessitate perhaps unlocking the token in order to build a treasury?
Not much goes actually. So the small funding we got pretty much covers the first things that need to be paid for hosting, literally a couple of devs for some time, and that's basically it. The rest should be DAO. So there is no runway issue right now because anybody who is joining as a contributor will be joining essentially DAO. And of course, the formalities can be discussed, right? If somebody needs a more special attention with that or not. But otherwise, there is no concern with regard to the funding on that front. However, I think you're getting, Nick, I think you're referring to the fact that the DAO should de-risk its treasury into other assets, which I agree with. And there are many ways to do it. Those ways haven't actually been discussed yet. So if you want to chime in on that, would be cool.
I mean, it's a difficult one, isn't it? I think, we've been talking to the debts DAO guys. It's, I've dropped a document in general, so have a look through, but effectively a way of providing loans to DAOs rather than them having to sell their own token, which it's the eternal problem of having to dump your own governance in order to fund future revenue, unless you've already got like a good revenue stream coming through. I think that's probably one for the future, though. But I think it becomes a pertinent point when you want to scale, etc. You need that extra revenue stream, perhaps, and because you can't really value the token as it is at the moment. So, we've no idea what's sort of being given away or provided or paid to anybody. So, it's just one to consider. I think that's quite an important point of the unlocking. And until there's a necessity, I don't think there's any real need to do it because everything needs to be stress tested anyway before bringing in a whole bunch of users.
Yep, agree on that. So again, it's not like a half a year discussion. It's more like a few weeks to get the system up and running.
Yeah, so the biggest problem with the transferability right now, of course, we need to first come out with some okay, how are we going to establish that initial liquidity, which actually does not need to be that much, guys. Remember that 5,000 people gave almost $10 million, yes, to basically mint those credit accounts. And if Gear has a liquidity of, let's say, $2 million between Ethereum and Gear combined, that's a big enough pool to basically allow people to start showing some preference towards Gear, because what Overqualified said a little bit earlier, yes, I'm also thinking that Gearbox is an amazing protocol. I just don't have the ability to show my preference about it. And the idea here is that because right now it's the early stages of the protocol where people actually can show strong preference and then become very strong advocates of this protocol as it's growing, as opposed to, after a couple of months when the protocol is already very established and is very hyped, and suddenly the token still does not have an established price. And then what happens? You come to the market, you are either going to be overhyped and the price expectations are going to be some ridiculous numbers, which are not going to allow again new people to come in, or if they come in, they're just going to get burned. That's why I think it's important to create some very basic program for okay, where is the initial liquidity going to come for Gear to have some DEX liquidity, so that the token can basically be exposed to the market forces, and as the protocol develop, the market can actually basically show what they think about Gear protocol, and you allow people to show that preference.
I'm not sure we should dive into price speculations of somebody getting up higher or down. I mean, I don't think you really disagree with the points. I would just second them, sure. As we all agree, they get to this point. It's not tomorrow, but it's not also half a year. So more like a 1-2 months kind of timeline max. Again, max depends on other criteria. But yeah, okay. Ren, sorry, you wanted to say something?
What we just talked make really sense because actually we all talked about that we shouldn't incentivize people. So what kind of behavior that we should incentivize now? I think it's more like we should incentivize to build more strategies to make this product useful. Instead of incentivize like liquidity mining or other things, the first thing is to focus on build more use case, build more strategies. Yes, that's all.
Sounds good. Yeah, guys, let's do like another 5 minutes max. Let's do like a quick round of everybody's opinion, and then those opinions we can convert into a summary to really get like actionable talking points for later on discussions. Hello. Who would like to go and do the final round?
I'm honestly just waiting for somebody else to start.
I don't know if there's much more to say right now. I could introduce my Alchemix idea, but that's on a longer time frame, so I don't need to waste people's time today on that.
If you want like a summarize into sentence, would be good to know as well. I saw it, but just like wanted to get a quick recap as well, please.
Yeah, I can of the Alchemix idea or of the whole chat.
Sure.
Yeah, it's just an idea I had. The idea being we want some protocol-owned liquidity. All the ways to get that right now involve just dumping tokens. Alternatively, you could take revenue and you could pair it up with Gear tokens, but that means we couldn't use that revenue to boost the lending pools. So the idea was to work with Alchemix to integrate Gear lending pools into Alchemix, so you could then deposit all of the revenue from Gearbox into an Alchemix vault. You could use the and you deposit into the lending pools through Alchemix, and then you would take a loan from that collateral, and then pair that those assets up with Gear tokens to create protocol-owned liquidity. So that way we can have our cake and eat it too, where all of the revenue is still going into the lending pools, but Alchemix essentially enables us to take a loan from our lending pool collateral and slowly accumulate protocol-owned liquidity that way. So. It doesn't involve.
Speaking of that, then, it makes sense. So, was anybody able to get the stats on what Olympus has raised for other projects in the past few weeks? Like, if a project engages for bonds with them, what is the that they get in the treasury back? I wasn't able to find the numbers.
Yeah, well, I can tell you like how much Alchemix has accumulated, and I can tell you I can figure it out like how much ALCX has gone to emissions. I know we've been bonding for a few months now. The emissions were about 15,000 Alchemix a week. 10% of that, so about 1,500 times, let's say 8 weeks, so 12,000 times $200. So that's about $2.4 million worth of Alchemix, and they've bonded, well, I guess it was worth more, so maybe 5 million, and we bonded for about let's see, maybe 6 or 7 million value. I mean, it's pretty 1-to-1. It all depends on how the token moves and stuff. The issue with Olympus Pro is the best strategy. Like if I own Gear tokens and Gear was on Olympus Pro, I would sell my Gear tokens for whatever asset we're bonding towards. I would bond that to get more Gear tokens, and I'd just keep doing that. So basically every single week I would be dumping Gear tokens into the liquidity pool. So one, you need a lot of liquidity to do that. And two, it's still short term, a lot of dumping. So Olympus Pro is a better way to basically sell gear tokens for protocol-owned liquidity, but at the core, you are still dumping DAO tokens to accumulate liquidity.
I see. So the numbers are pretty fine. Yeah.
It really works mostly just for Olympus. The Olympus Pro thing really works mostly just for Olympus. Yes, for all the other protocols that are using Olympus Pro, like the performance have been very, very small. And at the end, what are you doing here? Like you are selling tokens at a discount. Yes, I mean that protocol owned liquidity at some point. Like how much liquidity do you actually need? You know, it's not that. If you have that much protocol-owned liquidity, you are immune to dumping, because at the end, that liquidity is just going to sit there absorbing everything that you already sold at a discount at some point. I mean, that sell pressure is not going to disappear just because now the protocol owns the liquidity. It really works for Olympus because of their, pseudo Ponzi economics, like minting to tokens, etc., every time when somebody bonds. But it's those 7-day locking period is really not something that we should really consider in gear, like selling gear at a discount for 7 days. For 3 months, yeah, maybe, but 7 days, does not make sense.
I'll also add that I've done some research, quantitatively on various rebase tokens and a bit on Olympus Pro. It seems that short-term bonding for the person who bonds is not profitable. So in Olympus, this is especially true because basically you are always non-profitable in short term. So you are only hoping that because of the compounding rates, you will be profitable long term. I'm not sure that those incentives are as strong in Olympus Pro. So this may lead to like a lack of interest because basically you're always getting wrecked on each week when you bond.
I will say protocol and liquidity does help reduce dumping because everyone's dumping into this pool that the DAO owns. So essentially, the more people dump, the more gear gets locked up, which means if people want more gear, they're going to have to buy it back. Like no one's going to exit the pool and continue dumping. So it's still a good thing to aim for. I just don't know if we need to accelerate that with Olympus Pro or if we can just do it ourselves through like Alchemix.
Okay, cool. Sounds good. I think there is enough to work with. There is Olympus idea, there is other POL's ideas, there is the Alchemist idea above qualified, there is Ondo Finance and Fey. We can maybe ask for a tranche from Frax to get minted coins and put them into LP. There is the LM that can be put either inside of liquidity providers who are passive or incentivize credit account borrowers who then in turn bring the utilization curve higher and the rates of LP higher. So indirect incentive then. We can also look into sharing fee model with the referrals based on how much they bring revenue to the protocol. So quite a few things. Let's get to them slowly as everybody gets boosted up and gets fucked up for New Year's. Thank you guys for sobering up before the call. I wrote two things while we were talking in the chat in general. I will just try to compile them after that. And then as soon as they're done, we'll basically just post it all on announcements so then we can get working groups together and continue doing this. For now, anything related to econ, we can continue in Gear Econ chat, and everything else, of course, is an open system. It's just that the next couple of days we'll probably get all the information together, or maybe just one day, so then everyone else can see and start contributing as well. How does that sound?
Great.
Okay, cool. That was a really, really long call, 2 hours. More than 200 people actually tolerated this and sat through, and you guys have been active, incredibly thankful for that. I'm really happy to have such an amazing crowd of talented people. Happy New Year's, Merry Christmas, all of that stuff. Booze up, stay safe. That's from my side. How are you all?
When POAP? Just kidding, don't answer.
You can POAP.
I'm guessing
no POAP for the event.
Portion of these 200 people are here for one thing and one thing only. And they will not get it.
I don't know why people just want so many POAPs though. I mean,
I know, right? It's
if
ridiculous.
they ever make a token, there are like millions of users now. You will be so diluted. It's like it's bigger than
Badge of honor. It's a badge of honor.
Yeah.
You have the Pope. You collect them. It's like Pokemon. Gotta catch them all.
I am 100,000 gear tokens delegated to me away from a proposal, and my first proposal will be to never do another POAP.
Because
Then
we will be
delegate to you.
I'll delegate for you then.
That'll do it. Like,
I'll take
I'll
my
leave
Discord.
Gearbox after that. I just no problems.
Okay, guys. If we ever get in a quarrel with overqualified, we know how to settle it. Just make 2 pull-ups at a time. He rage quits. Okay, Mikhail Ilgis, any last words you want to say?
No, thanks. Very, very great discussion. Thanks for your participation and active involvement. A lot of great ideas. Hope we will continue to develop the protocol, and you will keep a lot of things, especially about new risky model analytics and so on, in discussion in Discord. So Ivan, please create us up all channels we told about to continue our discussion about technical side. I'm really impressed how many talented people here.
Okay, perfect. Then at this, I mentioned it, please enjoy the holidays as much as you can. Have a lovely time, and we'll catch up probably, I guess, mid next week, right? After New Year's, as soon as people are back from the holidays. By then, we'll already have a few things in order, the documentation and other things, so we can catch up and actually start the work then. For now, we can just continue conversation and shaping the ideas. Okay, sounds good. Ends in the call then. Thank you.
Everybody.